Hello and welcome to the closing bell for February 24th, 2026. I am Keith Harwood here for Yellow Tunnel and Tradespoon. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Tradespoon, Yellow Tunnel, and myself are not investment advisors and not registered with the SEC nor FINRA. If you do have questions about your own personal financial situation, please consult with a registered financial advisor. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at Tradespoon or Yellow Tunnel may have a financial interest in the securities presented and the trade ideas. So please keep that in mind as you evaluate anything that we discuss for your own personal investment or trading portfolio suitability. All right. So with that, we've got a bull market today. A little bit of buying everything, frankly. So bulls starting to try to grab on here, and there's a high correlation of just again, buy everything, seeing equal size moves in many of the big indices. So relatively equal size moves between tech, small cap, S&P, equal weighted S&P, all these indications that right now it's just kind of a smattering of buying across the board with very few stocks. And there are still stocks that are down today. You know, Texas Instruments, for example, down a little bit today. But generally, kind of one of those days that talk about throwing a dartboard at the old Wall Street Journal list of stocks, and almost anything that you pick is going to be up a little bit today. And it makes it feel easy for the bull. Everything kind of looks bullish, but it also creates this dynamic where the individual stock picker may be stuck between determining whether it was the tailwind of the market that caused your stock to go up or the fact that people are actually trying to buy that name. So we'll look through for some indications of the individual names that are being bought in particular, but just broadly speaking right now, we don't have a lot of sellers for this market. Now that's kind of what the market tells me when the market is going up in the way that it is right now. There's effectively a lack of sellers across the board, people that just don't feel the need to reduce positioning almost anywhere, and just general money flow is positive. So when there's a lack of sellers, the market just continues to drift higher. At the same point, we are seeing hedging activity. So people are not feeling comfortable that we're out of the woods yet, but they're doing so in the way that I've been looking for. VIX is down, even though puts are up. The VIX is down much more than puts are up. And that tells me that there are finally those buy riders. And we'll come back to that when we look at the chart of SKUDEX. But that sets up more and more now where a call vertical, which used to be kind of the preference, we're starting to switch away from that a little bit. Call vertical is set up when calls are relatively expensive compared to at the money options. When calls start to get cheap, i.e. people start to buy right, then I have to start looking for opportunities where I can buy an outright call. When puts are cheap on a relative basis, a put credit spread can work because I'm buying a further out of the money put, so on a relative basis it's cheaper. So this is driving more and more and more towards a return on capital trade built upon long outright calls. The VIX is still somewhat elevated, so it's not ideal yet. Calls are still somewhat elevated, so it's not ideal yet, but it's driving that direction. And if the market continues to go higher, I expect to see the VIX start to come up really aggressively. And then that's the point where I need to either be long calls for the extension or hedged. Just even if the puts are expensive on a volatility basis, I don't want to just be long the market since those breakouts have continued to fail, or at least want to hedge. But that's in the future. Right now, I'm looking for return on capital trades. And I'm also looking for both call verticals and calls depending upon the setup. All right, so all in all, I'd say the trend is continuing to look the same, where we get down towards, like, say, the 100-day moving average in the S&P 500 or down towards support. And then the sellers run away. And right now the sellers are running away. They're just getting out of the way, letting the market drift higher and come off of these lows. They weren't able to push it down to hit stops. So then they get out of the way and let the market determine when there's a real aggressive active seller in the market and or start covering those shorts because it didn't push down. Still like to allow more time on the bullish plays just in case this is another false recovery. And the VIX is now coming off below 20 to a point where I have some more confidence. And I think that the opportunity is starting to show itself here. is always be aware of those earnings dates. We've got tomorrow afternoon NVIDIA. That's the big one on everybody's mind. Handful this afternoon, handful tomorrow morning. There's actually an interesting one, I think, tomorrow morning in Lowe's, and we'll take a look at that. In particular, because we just had HD, Home Depot, and that was a relatively range-bound positive earnings result. And there may be an opportunity as a result in Lowe's to do something similar. I think this is that bottoming process. So it's not calling the bottom, it's seeing that bottoming process. When we say don't call the bottom, it really means don't buy the lows, because you can't buy the lows, right? Unless you have a very limited stop. Buying the lows is all about saying, this is the price point that people will stop selling and will start buying. Bottoming process is the people have already stopped selling and the people have already started buying. Do I want to predict that they will stop, or do I want to follow that flow to say it appears that they have stopped, and now this creates less resistance to the upside? So it's that go with the flow mentality. The flow now is on the positive side. When I'm calling a bottom, I'm going against the flow, expecting it to stop and reverse course. All right, beyond that, always be flexible. Let's take a look at the markets. 10-year yield really going nowhere, just stable here around this 405 level. It looks to me, honestly, like we're going to test 4 and maybe go below. There's been some comments about maybe slowing down rate cuts. It was Goolsby, I think, said that we need to stop rate cuts. But the 10-year yield is a little bit more of an economic indicator. And so for maybe long-term interest rates stable here around 4%, there is concern that we don't have enough economic growth to cause higher long-term interest rates. If we start seeing that economic growth through earnings, short-term interest rates no longer need to go down. Long-term interest rates can go up because we see economic growth. And if we continue to see mediocre earnings, I think that commentary about more rate cuts is relevant in the short-term market, short-term interest rate market, as long as there's no inflation. And the CPI data, the PPI data has not been alarming yet. But if that shifts, stagflation becomes that ugly word that we talk about, and it gets me nervous at that point. But that's just something to have on the back of my mind, not as a current problem. In regards to MMFI, we are bouncing back. We touched 50 and we got slightly below yesterday. So even though we have broad participation today, we had a lot of stocks get below the 50-day moving average yesterday, and it looks like there's value hunters today. People buying the stocks that are on lows. For example, a lot of buying in alternative harvest, aka cannabis and marijuana stocks. These stocks have gotten destroyed. People are going after them today in many ways. People are buying crypto-related companies today to a certain extent, certainly more than I would have expected given what crypto is doing today. So Bitcoin looked ready to liquidate this morning and then bounced back and stabilized. Thinking through this, excuse me, on Friday I mentioned the desire to have a little bit of crypto on in case we started the explosion to the upside. I didn't want to put on a large bullish position in case we just bumped against resistance and fell. Now, yesterday, that's exactly what we did. So the higher probability was potentially to the downside, but that low probability event where if something weird happened over the weekend that caused a cryptocurrency rally and pushed it to 72, I knew I couldn't get on board at 72 or 73 very easily, or 78 very easily. Maybe around 70, 71, I could have been still buying in. But if we got too far up, I would feel like I was chasing and I wouldn't be able to get on board with that. So I bought some low dollar outlier type calls in case of the spike. In IBIT, I had the March 48s. Those are down a little bit today. Nope, not March 48s. Must have been the 44s. My apologies. March 44s. Those are down a little bit. I also have some MARA calls just to kind of keep you guys updated on where I'm at here. I've got some 10s here, and I still have my 12s. The 12s are probably dead, but maybe I get lucky. March 10s give me a launch point trade if the crypto market recovers quickly, and if it recovers more slowly, I didn't put so much capital into these outlier type trades that I'm afraid or scared to buy in on a true trending bullish move. If I load the boat on 10s or 12s for the outlier move, can't really buy a meaty higher probability trade if we get to 8.5. But if we get to 8.5, I wanted to have some capital set aside that I could then allocate. And if we go to 9 or 9.5 quickly, I don't have to jump in because now my 10s are kicking in. So I needed something that was positioned in such a way that if we rallied too quickly, that I would be willing to buy in, that I'm already in. And something that if we rally slowly, I'm okay with those call options, maybe underperforming the market move because I still want to build more. So it's like a starter position is what we often refer to it as. It's not the full boat, but it gives me some exposure in case things move faster than I expected. And now that the market seems to be stabilizing here, I am a bit more excited that this starter position has a shot. But more importantly, if IBIT can get up towards 39.5 or 40, I can start to build a real position, a more high probability position. At that point, 40 calls, 41 calls, something with a little bit more risk to express a bullish view with a good probability of success and a good return on capital instead of a low probability of success, but the return on capital in case. Now going to the broad market again. S&P yesterday retested the 100-day moving average, bounced up, higher low. So we've been doing these tests of the lows. This time we didn't push down to 676. So that's a good sign for the market. In fact, we went up $5. Now we've got $10 of room to the lows, resistance at around 700, pretty close to the midpoint, just as we were on Friday, and a little bit more chop. But again, today, a bit more bullish overall with a little bit of everything being bought. Good afternoon, Fred. You're late. That's 5 points off. So highest you can get for today is an A-, I guess. When I go to the VIX, down about 1.5 points today. So the big thing for me is combining the VIX with skew to understand where this money flow is going and what's driving the VIX to get lower. And what people are doing is what I can basically figure out from that. So if the VIX is down, is it down because people are selling puts or because people are buy writing long stock positions? Now coming into today, we have calls cheap relative to puts. Sorry, calls expensive relative to puts. Misspeaking. Puts are cheap relative to calls coming into the day. Today, puts continue to go higher. So for the VIX to be down, people are net buying out of the money puts, which means they're either selling put credit spreads where they're selling a near at the money option and buying a far down put for protection, or they're long the stock, buying a put and selling more calls. So continuing to build that hedge side, the concern to the downside, but now starting to finance it. And this is a natural process for the market. Oh, wrist rehab. I hope your wrist is okay, Fred. That doesn't sound fun, but I hope it's going the right direction. And sorry, back to the market. So go in the right direction. Right now we're seeing the right direction for me to say that people are willing to be long the market. They're getting the rest of their hedge on the put side. And now they've gotten to that point where because of the amount of capital they've put into the market on the put side, the hedge, they're looking to finance it. And so that's either via selling some near at the money puts to be willing to buy the dip because the market continues to prove that buying the dip works, or by selling calls against long stock and financing the hedge. All in all, that leans the market to a more protected status with the skew coming up. They've got their hedge on the downside. It helps build a ceiling to the upside in the short term as market makers are now going to be long calls and need to hedge by selling stock into a rally. And I expect that tomorrow when we look at the skew index, because it's updated daily, we'll see the numbers around 145, 146, a bit more middle, and then potentially start driving towards highs. And when we get towards highs, 160 or something like that, 156 to 160 range, that would indicate to me a stronger probability of a short-term top, because that's where people are aggressively selling calls and aggressively buying puts. When they're putting a real ceiling on the market and getting aggressive with their hedge, and it really stops the market from going much higher. When I look at small caps, they're up 1%. So the S&P is up 0.75%, well, now 0.2%. Small caps up 1%. It's about roughly in line. Tested the 50-day moving average, which has been our support here for a couple of months since the beginning of the year. And it's lather, rinse, repeat. So what's next? Looks to me like the market's going to go to 269, and then you get the inflection point. So we touch the lows, we touch the highs, and then we're at inflection point decision time. Do we break out to a new high, or do we pull back because some other fundamental input comes in? Whether it's tariffs being raised from 10% to 15%, which just happened, escalation with Iran, which doesn't seem like likely, but you never know. Any of these sort of things can cause a shift in this tone for IWM and the broad market. But right now, my base case is test the highs and then decide, rather than bounce back to the midpoint and then stop moving. Speaking of Iran, oil companies still generally firm. Dips getting bought. USO slightly weak now, was slightly positive earlier, was slightly weaker later. Now back to about unchanged, nothing really changing there. XLF trying to bottom, continuing to fail to do so. Spike down, go down the elevator, go up a few stairs, then go back down the elevator, maybe go up a few stairs. For us to really get bullish in XLF here, I'm waiting for a move above, the 200-day moving average, and that's far away at this point. Absent some sort of news that benefits financials, seems unlikely that I'm going to have a justification to get long financials in the near term. So I'm going to be avoiding names like JP Morgan, avoiding names like Morgan Stanley that have been relatively strong within financials, but now getting pulled down with it. Avoiding names like Wells Fargo, avoiding the regional banks too, because at some point they get pulled down by big bank weakness, and that seems to be coming into play now. Zion looks like it's found support, but do I want to go into regional banks when big banks are weak? Generally, no. I want to start seeing some strength in big banks to go along with that regional bank investment. So it's a sector that I'm not going short, but avoiding. Utilities continue to march higher. Duke Energy, prime example of the bullishness in utilities. Today was looking a little bit weak, touched the 10-day moving average and bounced. It's aggressive power trader name today. It's come up a lot recently. We're seeing a lot of utility signs, whether it's from a Dominion, who just had earnings that pulled it down, a Southern. The big one I always look at for utilities, if you're looking for a specific name, is NEE, biggest holding in XLU. Just broke out today. Been a very stable trend to the upside. Viable dips. Wouldn't necessarily be buying here because we're testing the upper end of the trend channel, but on a dip it can be bought. If I don't want to buy into NEE, I can look at Duke, which is not quite to the upper end of the trend channel, more middle of it, or I can go to PCG, PG&E. No, sorry, not PCG. That's just too steep. I can look at EIX, I believe, has come up recently. That's pretty steep too. Maybe Duke is the safest look, or just going straight to XLU and saying that's overbought, but on dips I can buy into that, and this looks a lot like NEE. So if I don't want to go into NEE because I don't want individual stock exposure, going into XLU should be kind of paired with NEE right now anyway. And then XLV, the safe haven can't break out. So we tested the highs. Now we just pull back a little bit and go sideways. There are individual names that continue to look bullish. Johnson & Johnson's been very strong, testing a potential breakout here as we bumped against this resistance at last week's highs over and over again. May end up breaking out. I keep trying to circle back to UNH, and it keeps letting me down. So for now, UNH is a hold off. I would say the next time, if it comes, that we retest this 295 to 300 range will be very interesting. So what we often see when we've got a pullback and a gap down on earnings like this is a retest and a pullback. But we don't normally retest and fail twice. So if we can retest 295, that sets up on the bull side. But then I'm missing out on the first 8 to 10%, right? 9% from here is that inflection point. In the meanwhile, is there anything to jump onto here with UNH? Probably not. Unless someone like Buffett says he's going to triple his position, what's going to get this market going again? Well, frankly, it's a question of the chicken and the egg. Higher prices, I think, gets people aggressively buying again. But you have to have aggressive buyers to have higher prices. So somebody out there has to start buying in order to make this move. You can get all of the trend followers on board if and when we hit 300. But I don't see how you get to 300 without an investor saying it's undervalued here and or some sort of news coming from them that sparks a fundamental based buying frenzy. And it's not earnings for another 2 months, so just need somebody like Warren Buffett who says, I'm ready to buy now because I see the future value, and he's already in. So he either needs to start increasing his position size or somebody else needs to say, I want to do the same thing. I see the same message now, or I see the same story. And then we go to tech, and tech is actually okay. I'll come back to that, Fred. So Mag 7 bounced off of the 200-day moving average. Everybody's talking now about how the Mag 7 trade is over, which means it's time to resume it, probably. The nature of being a contrarian. When I start hearing everybody talk about the end of the Mag 7 trade, that may mean that it's all, the selling is over. Maybe not, but I think of that as a good indication that things are reaching the end of their cycle when it's all the news wants to talk about, and more of a speculative, op-ed style, rather than a true justifiable style. So they're talking about the end of the Mag 7. They're talking about the end of the AI investment. Palantir still doesn't look good, but this may be nearing the end of the selling process. I don't see the bottoming process fully here yet. I can see some signs that maybe it's getting close. A third test of the lows, no push through here. If volume starts to lighten up on down days and increase on up days, then that's a sign to me. And today it looks like, it's the volume in general has been lightening up as we've not been rallying post earnings. If that volume continues to stay light and then starts to build up with a rally towards 135, that's a sign for me. But until then, I don't think I want to be focused on the AI trade. I got to find the other trade. Maybe it's IONQ coming up on earnings tomorrow after the close along with NVIDIA. That looks very similar to Palantir, showing bottoming action. But with earnings, that may be a driving force to move this much lower or much higher. I can't see much lower, but much lower in this case would be like 30%. A normal move here, we're talking about 10% on earnings. And IONQ has been fine on earnings, by the way. It's not like one of those stocks where it constantly goes down on earnings. We've had ups and downs, which is, I guess, good to see when you're dealing with a company that it's more about growth potential in the future as opposed to the current profitability. And SMH, by the way, nice looking chart still, testing the breakout. So SMH still looks okay. NVIDIA still looks pretty good. AMD looks, there it is, great today still. Meta buying a bunch of AMD chips. Everything's good there. With regards to State of the Union, I think there is just some concern that something stupid gets said, as always. Any of these big, messages, there's a concern that something unexpected gets said that drives big market behavior. And that may be part of why we're still seeing hedging on the put side. People concerned that there's a move. I recall, I'm thinking about like big inputs from things like on the political side. You know, obviously when Trump was elected the first time, that shocked the market against Hillary Clinton. And we had a big market reaction to the downside and then a recovery overnight. When Obama got elected, it was kind of a non-event. You know, and those are generally going to be bigger inputs. Elections, when you get a State of the Union, I think it's just about the verbiage. It's almost like a lesser version than even a Fed conference at this point, because, you know, when the FOMC talks, they're talking about strictly the economy. State of the Union, I think where I'd have a concern would be if there was a comment on tariffs, a comment on Iran, a comment on something market impactful, a comment about you know, ICE or something like that that's just a bit more political in nature, but not an economic driver. I think would just be concerning from a, you know, maybe what is said, if it comes out positive or negative or whatever, you know, the reaction. But I think generally speaking, what I'm looking for more than anything would be if there's something said about tariffs, because tariffs right now are a big focal point. And I'm not sure there will be much to address on tariffs, but given what happened on Friday and then over the weekend, maybe that becomes a talking point tonight, and then that could have a market impact. So yeah, I think generally speaking, I'd say the State of the Union, I expect kind of a non-event and a slight bullish element, because usually just getting through it and not having any surprising comments is enough to give, you know, 0.5% or 1%, because you say, okay, cool, that risk is off the table. They didn't say anything that was market moving to the downside. Yeah. Let's run through the weekly power trader names for this week. We got Amgen pretty unchanged here. Overall looks on the bull side. My support's too low to sell a put credit spread. We're touching the inflection point for either a breakdown or a pullback. And so I'm at the spot of not necessarily wanting to act yet. It's an ascending triangle. We're testing the highs. From here, we're likely to go up or down and not stay here right here. The least likely scenario seems to be stability. A pullback could be as small as 373. It could be much more significant if we get, because we are at the inflection point, a breakout would be generally a call buying opportunity. So since put credit spreads are too cheap to sell and calls really only work if we get the breakout, if this inflection point's a coin flip, I'd say maybe I wait. If we hit 385, you know, start jumping on board that ship. CF. I actually like the way CF is looking here. It's setting up a bull flag. Positive earnings, 2 to 3 days of pullback. If tomorrow is a lower high and a lower low, never mind. But if tomorrow is the first higher low and higher high, then I can start looking at that bullish move to 105. So tomorrow is the big day for CF for me. March 100, 105 call spread is the simplest way to express that. And that's what I'll be looking at tomorrow for a CF. But for today, again, we're still making lower highs and lower lows. So no aggression yet. FRT, not my style of stock, just so you know. Zero open interest on the options, effectively. You know, total volume today is listed right here. I don't have multiple pages. Biggest trade today on the options is 1,000 lot. And that is crazy. So 1,000 of these calls trading today. And it was a buyer. Interesting. Somebody is very bullish on FRT and building all of the open interest really today. And I may be thinking differently now. Is the liquidity good enough for a call vertical? I mean, that's a long-term trade to go out to August, but the fact that it was a buyer of 1,000 of these calls today, what time did that happen at? 12:19. Yeah, so it happened with the stock at 108.35. Yeah. So that is a buyer, but for some reason the stock has not picked up much here other than the big hedge right there when it happened at 1220. Strangely, stock went down right after that trade went up. Might have been tied to stock. Anyway, August 115 call, buyer apparently today, aggressively so. That makes me more interested in FRT on the whole. It's a long-term bull, so looking at either a stock trade or a longer-term call vertical. Yes, the buyer of these may be right with outright calls. Yes, they are dollar cheap on a relative basis, $3.50, but for 6 months, that doesn't feel that expensive. It's because it's a low volatility stock. And we have rallied to $8 in about 3 weeks. So maybe those are too cheap. But usually I look at a call vertical, and maybe because implied volatility is so low, I don't want to sell like May 120 calls. Even mid-market, I get a bad fill. I'm not sure I can get a fill here on options in general, but I'd consider a May 110 if I could get it mid-market 315-ish. That doesn't look bad at all, and it could end up being a double. Otherwise, I think stock trade. It's hard to get anything real positioned in the options, as somebody just paid up for those calls earlier today. GLW. This one's too high for me. It's working. Not my style, but it's working. So I should stop thinking about my style apparently and just follow these trades, because each of these, there have been so many of these stocks that look too overbought and yet they keep going. And again, it's not really my comfort zone, but I got to figure out a way to get it into my comfort zone. I was talking about this earlier with somebody today, and I said, you know what? I have looked at a number of these aggressive power trader names, these weekly power trader names, and said, it's not really my style, or as a sector that I have a bias against, or a stock that I have a bias against, and I should stop letting my bias get in the way of what the data is telling me. Halliburton is a prime example of that. On aggressive power trader today, on weekly power trader coming into the week, I've been biased against the energies, as you all know. I've stated before that saying I'm done, I give up on fighting it, and saying my bias has just been wrong. And that would probably be the ending top point in it. So, today is the day that I just stated that officially, apparently. I think it's time to buy some Halliburton. The 35-37 call spread's one way. When we were on lows, a credit spread was another way here. Like a 34.5, 33.5 was trading about 20-25 cents earlier today. Now it's down to 13. I think the call spread is the better trade now, since we've rallied 50, 60 cents since that point. 35, 37, 35.5, 37. Forecast toolbox for Halliburton says 37. I don't think that's anywhere near overly optimistic to think that a 4% rally can happen, and a 35-37 call vertical can go from, call it 90 cents to $1.60, $1.70 in that scenario very easily. Right now, that call vertical is 87 cents, and I could certainly see it getting to $1.70 or higher. So I'm right now working on my trading psychology side of things, and getting out of my own way on the bias and saying, I'm just going to start trusting the data more and more. It's part of that process, right? 2 years ago, all this AI stuff that, Vlad has been building for years was my first real introduction to it. I said, I still got to weight my opinion is 95% my opinion, 5% AI. And it takes time to push it from 95.5 to 95.5 the other way. And more, I'm just getting much more confidence in the AI tools and trying to remove my own personal biases out of the way, because the AI tools are, and by design, they're going to be better at identifying the patterns than any human, or almost any human. And so I have to just trust that the numbers are right. And if I have a personal bias that prevents me from getting in one trade, and that turns out to be the biggest winning trade of the week, the month, the year, then it helps eliminate my own personal bias by saying, okay, got it. My personal bias was again wrong. Better just trusting the data, better trusting the signals, better trusting the math behind it that the system is calculating. So for now, maybe it's the top, but I think it was give up time and start trusting the data and saying Halliburton looks like a really good bullish stock entry for today. Earlier today was even better, of course. Live Nation, another one here. This is at that right point for buying, it looks like to me, because we dipped down to the 10-day moving average. So even though it is a lower high and a lower low, had the positive earnings, now had the consolidation pullback. I've got a very clean stop here, probably around 155-ish. No weekly options. So I don't like to put credit spread when I don't have weekly options. But if I think we can get back to 170, just the earnings day high, 160, 170 call spread for 330, maybe it's 340. It's not the most liquid, but it does give a nice return window. 340 could turn into $6.50. Another spot that 100% return is well within reach. And given that, I think Live Nation is set up well for that. And then the alternative is, again, stock. I wouldn't go for any put credit spreads right now. I'd be looking stock or call debit spread. All right. And here's the nice thing. 2 out of the 3 in the aggressive power trader. We're also on weekly power trader, GLW and HAL. Duke, we already discussed. We are testing the upper part of an ascending triangle. And if it's just going to be a trend channel, then 130 is well within reach. And just to note on in terms of a structural type trade here, it is monthlies again. There's no dollar strikes. It's $5 increments. And I think it would behoove to be in a call vertical in April, selling like a 135 call, long either the 125 or the 130 and short the 135. So under the expectation that these utilities have done a lot of spike and a lot of work here, and a slow trend up makes sense for the next whatever time period. And then GLW and HAL I addressed already. GLW I'm still too afraid of because of the way that it's got that way overbought RSI. But Halliburton I think now is an acceptable time to get in. All right, so let's move to earnings. We've got a couple that I'm going to just show you guys, but I don't see a trade here. Mercado Libre, $1,900 stock, which makes it hard to do anything. Just know that it is a 7% mover on earnings, which is about $130. Options are not very liquid. $130 is nice if I could pinpoint the move. I could say 1,800 on the downside would be a reasonable target spot, and 2050 on the upside. Sorry about the sneeze there. But for me, I avoid $2,000 stocks even when I'm trying to do butterflies on an earnings trade. It's just a bit too much for me. Workday, not particularly interesting from the earnings perspective. Pricing in about what is normally expected, what normally happens, what normally is expected. We're pricing in all that. And the stock is trading at lows. I like it better when I have a clear support to go along with a predictable move or a clear resistance. And we just haven't seen enough predictability off of these stocks coming off the lows on earnings to say that I want to play one when it's at that low point in the price. Don't worry though, we'll get to the one that I like in a couple of seconds here. For solar, I like the chart setup better here, where we're in the middle of the range, so we have clear support and resistance. I don't like the variability of the move. 1%, 14%, average is 4%, implied is 7%. For an iron condor, I'd want to sell 12% move. That's not going to give me a ton of premium. And for a butterfly, I can't target the move. TJX, the last one I don't like. Normal move is 2%, expected move is 4%. Iron Condor selling something like 5.5% would be normally a potential intrigue here. I don't quite get enough premium for that, and so I go to Lowe's. Now, before I touch on Lowe's, Home Depot had earnings this morning, ended up $7, 2%. Earnings-wise, we were pricing in 4%. Normal move is about 2%. On the upside, the peak was $3.94, so about 4.5%. So on the peak, we were about in line with projections, maybe even a little bit above it. And Lowe's normally moves about 2%, pricing in around 4%. Last time it was up when Home Depot was down, but net, normal move here, 5% is a pretty good cap for Lowe's. So 5% of 280 is $14. $278.5 plus 14 puts me at 292.5. I could look at either a 292.5, 295 call credit spread or a 295, 297.5. If I want to give myself a little extra room, 295, 297.5 is 29 cents. Earlier today it was about 32, so it's down a little bit because we've pulled back a little bit. But either of those call credit spreads make some sense to me. On the downside, $14 puts us right at 265. A 265, 262.5 credit spread is 40 cents right now. So this morning when I was looking at it, 267.5, 265, and 295, 297.5 looked like the right strikes. Now that we're at the end of the day, I think moving down a strike on all of those makes sense. So a 265, 262.5 put credit spread for 40 cents, 292.5, 295 call credit spread for about 40 cents net, collecting about 80 cents for the Iron Condor and arguing for less than 5% move. And in the process, collecting about 30% of the max value. Return on risk is just under 40%. And that's a good setup for a generally predictable move, particularly with Home Depot's general lack of movement. I think that sets up pretty well here. So overall, I'd say Lowe's, Iron Condor. That's an earnings trade that I like in a name that is not normally a focal point for earnings. It's something that people don't get excited about the way that we get excited about NVIDIA earnings and Mag 7 earnings and stuff like that. So it's an opportunity in maybe a less followed name overall. All right. Beyond that, I think the biggest thing to note today again is that we're buying a little bit of everything. EWY, the consumer, EWY, not XLY, EWY. South Korea is up the most today, a little bit more Asian buying. EEM up second most, again, emerging market buying, and then XLY. So for domestic type stocks, XLY, consumer discretionary, which is dominated by Amazon, which is up 1.5% and nearing that inflection point post earnings. So remember where we were a couple days ago in UNH? That's what Amazon's got right now. UNH gap down, retested, and then pulled down. Right now we are here in Amazon, right? We had the gap down, the push up, filling back up, but not quite to the high from a couple days ago. 2 to 3 days from now, I expect we'll either see this pull back down to 197.5, or we'll see the follow through, and then the gap fill becomes the trade. So if we're going to mimic UNH, we're going to 197.5. If we're going to trade it the other way, I'm looking at a 230 price target. $11 down, $22 up, with determination really being if we can get above 210. So I think Amazon is definitely one to watch here because we're nearing an inflection point where I can have a predictable element of movement with predictable price target. And now I just wait for the market to tell me which one we're going to go to, up or down. Beyond that, biggest up moves today are in Ford, a lot of buying there, up 4%, testing the highs, thinking about a breakout. And then GEV coming up again. It's becoming a very popular stock for something that not a lot of people were necessarily talking about, a year ago or 2 years ago. This is now, just a massive move in GE Vernova, and it just doesn't seem to have anything to stop it. Then the other thing I mentioned earlier that's interesting to me is seeing CCG. It's only up 4 cents, but that's 4%. Tilray up 4.5%. These are starting to show some signs of buying of some, kind of alternative sectors. The crypto companies like Riot are getting bought. Marathon a little bit less. Riot's been the strong one recently. Hut 8 up 9.5%. So we're getting back into this mode of buying some stuff that is built upon that potential for a big move to the upside, whether it's in the cannabis side of things, whether it's in the cryptocurrency side of things. It's not quite there in quantum computing or AI, but I think more than anything to be aware that there is some interest here in taking some risk on some companies that are, potentially very spike, very high risk of spikes to the upside, short squeeze type plays, etc. It's interesting, by the way, that DJT is up 7% today. Speaking of the State of the Union, Trump media found a floor at 10. I don't know, maybe that can go back to 14.5. Maybe we can go back to some of the wild stuff before. In the meantime, I'm not thinking about those crazy scenarios. 14.5 seems possible in DJT as we now push above the 10-day moving average. My next real resistance point's around 12.5. What else is moving here? Texas Instruments, I mentioned at the beginning, is my biggest down mover today in terms of standard deviations, down $6.5. How about this? CapEx. So they're reducing CapEx as capacity expansion nears completion, yada, yada, yada. Basically, all I need to know here is this is driven by their spending plans and by fundamentals, and people don't like it. So earnings was good, had some follow through. Now that people have talked about this CapEx, they're getting a little pullback, and then the market now digests and decides if it matters enough to pull back to 195, or if this is the best buying opportunity we're going to get in TXN for the next few weeks or months until the next earnings cycle. Other names to note, just going back through the Mag 7, Microsoft pretending to have bottoming action. At the very least, it stopped going down. Palantir stopped going down. Meta stopping going down. Apple had the pullback, stopped going down. Amazon seems to be stopping going down and maybe at an inflection point for going up. Netflix stopped going down. So big tech, at the very least right now, looks like it's stopping going down. At least for now. We ran out of sellers at big tech, and the question is, can they now go to the upside? And when I see it across the board like this, I start to think that, yeah, we got upside here, barring a just overall market liquidation fundamental input. And I don't know what that would be. I mean, honestly, even like an escalation with Iran, that's not, war is not necessarily bearish the market. Tariffs may be bearish the market if we have a tariff news, something bad from the Fed. But bearish market, I don't, even though war is, I think everybody would agree war is a bad thing in general. Like, we don't want to see actual war. Some people, I guess, do. But I think that's not necessarily something that is bad for the market. All right, we get buyers of things like Lockheed Martin. when you have war, right? You get buyers of things like Raytheon when you have a war. Although right now Raytheon's down a little bit. So there are stock market impact of war, not necessarily a bearish input. Tariffs, things like that, economic war is where it can be dangerous, or interest rate issues. All right. So that's what I got for today. Biggest things are, again, lows. I think the earnings play makes sense for the Iron Condor. And I think it's time to just trust the computers that are, the smart computers, and say they got it right now and how, or they appear to have it right and how. So trust what they say. There's nothing there. Maybe the computer will start liking some of these crypto names thanks to Riot. But we'll see how that goes. All right, folks. Any other stocks you want me to look at, let me know now. If not, we'll just kind of keep an eye on. I always like watching Mercado Libre for earnings, and then the State of the Union tonight, and see how things progress tomorrow. I'll be on for the opening bell, and I will talk through NVIDIA earnings tomorrow morning, because obviously that one's a big focal point for not just those that like earnings trades, but those that are watching any part of this market, which is all of us. So thanks again, everyone. I'll see you tomorrow morning.